We have some insights in the news shaping the markets. Rebecca Walser, President, Walser Wealth Management, joining me here to chat about the very latest. What an incredible first quarter with the S&P 500 up over 10%. Now we're kicking off a new quarter, and the first thing we have to do is digest the PCE on Friday, which shows inflation somewhat, in line. Manufacturing this morning that exceeded expectations. Good morning, Rebecca Walser. How are you feeling about this all on Monday morning?
Well, thanks for dealing with my technical difficulties, Nicole. We might have to all deal with this next Monday on April 8th when the solar eclipse might interrupt internet. So I'm feeling good. I think PCE was in line with expectations, a little bit hot on the core, but that was already kind of forecasted with CPI and PPI, so we kind of expected that. The manufacturing data is any good news right now is really welcome because overall, I think the global trend, unfortunately, is going towards the recessionary tail. And so that always comes to Europe before us and comes to Asia before Europe. And we can see that happening, obviously, with China, with the UK and Germany. So I do think, Nicole, globally, we are moving downward and the markets just have not caught up because there's so much exuberance around AI.
Yeah, I do want to get to AI. When we think about, I just want to stay on some of the economic prints because Friday we're getting our all-important jobs report.
Yes.
And with manufacturing looking good and inflation, all the inflation prints have been relatively strong enough. You expect jobs to be what on Friday, pretty strong?
Well, I do expect the BLS will give us a strong number, but if we look at the last 2 months of trends, in January, for example, 353,000 jobs. When I came out, I was in New York that day, and I was, on a panel with Maria, and I was like, no, something's not right here. And then we saw a downward revision of 124,000 jobs the very next, retroactively for January. So I just would say, Nicole, we haven't seen this kind of corrective downside, except for the last time we saw this mini corrections massively to the downside was 2008. So I do think there's a little bit of data manipulation here, and I think that it helps when it helps the market, But then again, good news is not good news because any kind of strong jobs numbers, Nicole, will really, again, push the Fed to potentially not, cut in June. And the market is obviously wanting and expecting some kind of June cut. So we have to also be cautious about that. If the number looks too good, then that, again, is something that is going to give the Powells of the world and all the other governors voting members a problem with rate cuts in June.
Yeah, so let's go over the rate cuts just one more time, just to be clear. What do you think we will or won't see when it comes to the cuts?
Well, it's funny because when December came and we had a pause, the dot plot showed 3 cuts. The market already priced in 6, was pricing in like 150 basis points. Now we're looking at much more realistic numbers of maybe 75 basis points, 325, basis point cuts. However, in order for that to happen, Nicole, that really does have to start in earnest in June, because even though it's an election year, and I really don't buy, I'm not one of those people that buys into, the Fed can't operate in an election year to look like it's trying to help the current administration. I don't buy into that because of the 9 federal elections we've had in the last, 9 last federal elections, 8 of them, the Fed has changed rate policy. So it is something that it really traditionally does do, but it does make it more difficult. So if we don't get a June cut, if the data is still too sticky and the Fed is not comfortable with a June cut, I think it's going to be really hard for us to see 3 in this year.
Yeah. You said you've become near-term bearish.
Yes.
How bearish and on what?
Yeah. Well, actually, what I'm really looking at is global geopolitical issues. And with this solar flare that's coming April 8th, we had an eclipse in 2017, and we didn't get any warnings. We have Newsweek coming out saying to buy food, buy pet food, stock up on food, stock up on water. And like in Florida, we're like, that's a hurricane preparation kind of talk. You don't see that for a 5-minute eclipse. We've had NASA telling us that there's a 100% probability we will have a solar flare. We don't know when, but there's a 100% probability it will happen. So between the solar flares, between the Baltimore GPS disruption of that boat and the power and hitting the bridge and the bridge collapsing, between all of the kind of the cell phone carriers kind of warning that they might have disruptions this coming Monday, April 8th, All of these things, to me, don't line up with the actual astronomical event of a disruption of the sun's light for less than 5 minutes. So I do think that there's preparation of the American public to have the electrical grid potentially be disrupted with a solar flare or some kind of cell phone disruption. And all of these things really are negative on the market. The market does not like disruption and any kind of, socioeconomic problems that could be created with stores shutting down and not having access to supply. So this is what I'm really concerned about with 1 week from today.
Yeah, and we'll be talking extensively about the bridge collapse and the economic impact later in the show. So thank you for mentioning that. We appreciate you. Thank you so much, Rebecca Walser.
The technical problems. Thank you, Nicole. Thank you so much.
I know, it's okay. You have a great picture there, and we get to see your face as you speak on the telephone. Thank you, Rebecca Walser, for dealing with the punches of live television. Thank you.